Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grubner. With us, as always, to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
I think I already see that you are fully in Chiefs red. Is that your prediction for Saturday's game or Sunday's game?
35-24, go Chiefs.
Okay, we've got that. We've got that out of the way. All right, not a lot going on this week, but we're definitely going to talk about all things farm income, which will be a pretty interesting report that came out from USDA today. But to kick things off, let's recap what happened this week in the markets.
Yeah, if we start on the cattle side, it was by and large a good week for cattle markets. Cash cattle up nearly $2. That still puts them almost $8 below where we were a year ago at this time, but it is nice to see strength in those fed cattle prices. Feeder cattle markets this week, I'm going to call them steady to $4 higher on the week. If we look at the futures side of the equation, the April live cattle futures contract closed up nearly $1.50, and the March feeder cattle contract closed up nearly 60 cents. We got strength in box beef this week again, up $5 on the week. Really strong growth in ribs and loins, driving that stronger box beef price. If we look at the hog side, cash hogs this week up nearly $2. The April lean hog futures contract closed up nearly $3.60. We did get a little increase in the pork cat value. It was up 50 cents on the week.
Scott, when we take a look at those numbers, especially on the beef side of things, are we starting to see some pretty strong demand pull with those numbers that we've had recently?
So, I think we maybe are starting to see some of that. Yes, we still have a lot of COVID cases, but I'd remind us that we're in better shape than we were when you and I would have talked a month ago about this. A number of places around the country where we're seeing those case numbers go back down again. And so perhaps we are starting to see more pull out of that restaurant demand side of the equation. That might be a precursor to what comes if we can continue to talk about lower cases of COVID-19 moving forward.
Definitely interesting to watch. I know here locally we're still seeing the big push for your curbside or your to go, but there are wait times. There's people that are anxious to get out and engage in the community, and I think that that's going to get even more so as weather warms up and we start to turn towards spring.
Yes, I'm really interested in the kind of longer term effect. So I think we've taught consumers, hey, it's okay to go curbside. And so when you get kind of, and what I hope is a post COVID-19 world, I sure hope we get there at some point, then what is that behavior longer term? Does the combination of in-person dining and the ability to still do curbside create even more demand than we would have had pre-COVID-19 because you give consumers more options? There's some interesting aspects of this that it'll take a while to play out, but I'm curious how it all ends.
So my last trip, just to kind of dovetail from this, a year ago for work was the National Pork Forum in Kansas City. And I spoke with Dan Hallstrom there, and he talked about how some of the Asian countries who had been impacted from the coronavirus pandemic early on didn't have the infrastructure in place like we did, think about like a DoorDash or an Uber Eats, whatever your app of choice is. And it completely gave them a whole new opportunity and a demand source for them. So I would assume that that would just be another value add for the U.S. restaurant industry.
I agree. And to me, the thing that was missing in the U.S. is if you wanted that high-end eating experience, you were likely going in restaurant for it. But now even those opportunities are available curbside that could in fact generate more demand for that very high-end product that we might have out there.
I promise you, I don't ever need to go into a grocery store again. The fact that it can be delivered to my doorsteps and I can shop within the app makes life so much more convenient, especially with little kids at home. So keep it coming.
Absolutely.
All right, let's get back on track. So slaughter, we've been talking slaughter. As we look at those numbers, kind of a lower week, a little bit on the hog side of things. Let's talk a little bit about what's going on there.
Yeah, if we look at the slaughter this week on the cattle side, 653,000 is USDA's estimate for the week ending February 6th. That's a reasonable run, but nothing too large. And on the hog side, as you suggest, 2.691. So we didn't quite hit 2.7 million head this week. We are seeing some modestly smaller runs as we look at those two numbers.
Are we going to have to let that 2.7 million head goal target go? And is it suggesting that we're more caught up than anybody probably would have thought we would be at this point?
Yeah, so I think it does. So for me, one of the things I keep looking at. So you look at the weeks that we're in right now, and look at the weeks going all the way back to 2005. This week for pork is going to be the 11th largest week since the beginning of 2005, and for beef it's 17th. Now, you and I talked earlier about these numbers, and we were even closer to the highest ever. And so we've come off of some of those very highs, but we still have a ways to go. I think it just points the way to what could happen, especially on the cattle side as we get in the second half here of 2021.
Jobs report came out this morning, and we're starting to see more jobs added back, albeit much slower than I think anybody would like to see at this point.
Yeah, that's right. We got 49,000 jobs out of the report today. That's certainly not going to get us out of our situation anytime soon. If you look at total unemployed folks out there, it's still 10 million folks that are unemployed, and that's well above where we were pre kind of COVID-19. It's nice that we're adding jobs. That job ad was a little less than folks expected. We were expecting 50,000 jobs. It just goes to me kind of the drag that we've seen with those added cases of COVID-19 coming through and really pushing some of this growth to slower levels than we've seen for a while. So we moving in the right direction. We just have a long ways to go.
All right, the big report today, farm income from USDA, and really our first look at 2021. Let's talk a little bit about those numbers and dig deeper into what we see, because I think there's more than just what we're going to see on the surface.
Yeah, absolutely. So I will say as we start, pretty modest changes across the board for 2020 revisions. USDA made some revisions in that 2020 data, but still you look back, net farm income in 2020, USDA estimates at $121.1 billion. Not terribly surprising. USDA is now saying net farm income will be down about $10 billion in 2021. And some may say, well, why did you say not surprising? All right, because we got higher market prices in a lot of cases. But I just say that the issue here is government payments. All right, so USDA says we rolled out about $46.3 billion of direct government payments in 2020, and they're currently estimating $25.3 billion in 2021. So that's a $21 billion decline in direct government payments. We're way too early in 2021 for us to get too worried about what happens to future rounds of programs similar to CFAP that we saw in 2020. If COVID-19 doesn't continue to recover, we could see larger numbers there, but it's hard to make up a $21 billion decline in government payments, even though we're going to have very strong market receipts. If you look at the livestock side of this equation, total livestock receipts up not quite $9 billion for 2021. That strength, $4 billion of it's cattle, $3 billion of it's hog receipts, according to USDA. So it's some recovery in higher cattle and hog prices driving the livestock side of that. You look at the crop side; these crop prices that we've seen of late are also going to add roughly $12 billion in crop cash receipts. So market receipts are going to be higher. It's just they're not high enough to offset the full 20 odd billion dollar decline in direct government payments that we see here.
And obviously very early on in 2021, so things may change. We don't know if there's weather issues that could potentially add some ad hoc type payments as well.
Yeah, absolutely. And it's a good point. I mean, first shot at 2021, if you look back at USDA's first shot of 2020, which was pre-COVID-19, so I'm not picking on them when I say this, that first forecast was much lower than we ended up. They also didn't project that we were going to have $46 billion of direct government payments going out. So we'll adjust in 2021. And your point about weather is a good one. I tell crop producers all the time, weather matters a lot here in terms of, do we go up in corn and soybean prices from here, or do we go down? I think we're going to plant a lot of acres of corn and soybeans. And if it's a good growing season, I think prices go down. And if we have short weather, we could generate even more market receipts, or even a larger increase in market receipts than what USDA is suggesting here today.
I think we also have to keep in mind, especially on the livestock side of things, while prices may be higher or expectations are for higher prices, we're also seeing higher grain prices, which means higher input costs as well.
Yes, that's correct. USDA says about another $2 billion in feed expenses for 2021. And we'll continue to watch where these prices go. And I'm curious to see what we get out of the February WASDE report that we'll get here in a few days, in terms of what happens to that South America crop. Is it going to get smaller or not? That could also ignite some higher feed costs coming.
All right. I think that'll do it for this week. As we look ahead to next week, what reports will we have there?
Yeah, so big week next week. Some monthly trade data right out of the gate on Monday. We get then the WASDE report on Tuesday, and midweek we'll talk about retail meat prices.
Sounds good. Hope you have enough chicken wings to get you through Sunday.
So I'll need a lot of chicken wings if the game's not close. But if it's a close game, I'll probably be glued to the television screen, screaming and yelling.
All right. Well, we will talk to you next Friday. Have a great weekend. Enjoy the big game on Sunday.
Yep, you do the same, Megan.
To have our weekly livestock market update delivered your email box every Saturday morning, visit our website, brownfieldagnews.com. You can also submit questions and comments there as well. And for all the great Brownfield podcasts, visit brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.